The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? So, an interesting Friday, huh? Got some big old moves going on. Maybe some of y'all caught some of the plays we were looking at this morning. We had a lot of things going on with the market and Bernanke and everything in between. And we definitely talked about, just being ready for everything that's coming up. And this is part of that being ready kind of day. And you definitely want to have something like Nadex on your side when you're trading like this. And if you don't have a Nadex account already, then you need to get one, okay? It is time to get the account. If you've been holding off, if you're going to get around to that, hop over there, get an account. It takes you 15 seconds at least to get a demo account and start seeing what this is all about, okay? So you're going to hop over here. You're going to go to Nadex, right here on TFNN.com, click on Nadex, and hop on over here, and then at the top right, you're going to say Create Account, big orange button. Click it, scroll on down. You can get a live account, you can get a demo account. I suggest you get both. The advantage of the live account is you can see the real orders. The demo account is going to mirror the real market, but if somebody places an order with like their funny money in the demo account, the demo account will reflect that. And so they could have taken up all the liquidity because they bought 10,000 shares. So for 5 seconds there may not be a quote there. We'd actually still see the quote over on the live market. Anyways, but go ahead and go open a demo account. Get that piece done first. Okay. Put in your username, first name, last name, phone number, and email address. Click apply for demo. You'll have a demo literally in 15 seconds, okay? So just fill that out. They'll send you an email. You'll have a password, and you'll be able to log in right away. Once you have that set up, now you're ready to start trading Nadex. And then, of course, to get a live account, you're talking 5 minutes. So quick start, just walk through the 5 steps, and it's really quick. It's really easy. And by the way, when you get your demo account, sometimes, especially when you get a live account, you still want to do some demo trades. And just call them with them that you need to extend your demo account. And they're usually pretty cool about helping out with that, especially once you have a live account, okay? So, because I like to have a demo account on anything I'm trading so I can try new stuff out. So, the demo account has a 2-week trial in it, but you can call them, ask them to extend it, and especially, like I said, once you have a live account. But keep that demo account handy so you can try out new things and then put what you like into play in the market. And just if you're trading right now, if you're trading the spiders or you're trading IWM or you're trading the GLD fund or, whatever, or if you're trading the futures or if you're trading the Forex, any of those markets, go in and place some demo orders that match up with what you're doing. Okay, so I'm not saying you have to switch right over right away, but you need to see the limited risk and the potential that's built in and the massive leverage that comes with it. And there's nothing like seeing to understand it and doing it to understand it. So if you see it and you do it, it'll help you understand it a lot better. And I've traded bonds, futures, Forex, forwards. I can just start going down the list, and markets all over the planet. And there's nothing like it. To me, it's the best. The spreads are the best product to trade, and their binaries are not like anybody else's binaries, except for I guess their parent company, IG Markets. Their binaries are very similar to theirs, but there's 2 different worlds in the binary market out there, and that's one thing I want to talk to you all about to let you know. If you go look up binaries, like I said, there's 2 different worlds in binaries. So on binaries, what do you want to do? You want to make sure you find somebody who is regulated, okay? Obviously, you'd like to ideally have an exchange, and Nadex is that. Why do you want an exchange? Well, an exchange lets you be anonymous to the other party, so they don't know who you are. They don't know if you're buying, or they know if you're buying, but they don't know if you're entering, exiting, winning, or losing. Okay, and whereas if you don't have an exchange between you, a lot of times you're trading directly against the market maker, and so they have obviously a little different set of goals there. They're trying to make money off of you, right? A market maker. Whereas, real good market makers are just trying to make money on the spread. But some of them are just trying to make money directly off taking the opposite side of trades. An exchange is just trying to fill orders, okay? Lets you be anonymous. So you want an exchange. And so the Nadex is the only exchange on the planet where you can trade binaries. Everywhere else you trade them, you're trading direct with some sort of market maker over-the-counter type thing, okay? And also not, regulated like Nadex is. And a Nadex is registered with the CFTC, and they're considered a future options type product, and which has all sorts of tax benefits as well. I'm not giving tax advice, but, see your accountant for more information. Let's put it that way. But, futures have the whole 60-40 tax treatment rule, and 60% short-term, 40% long-term gains. So that's a nice benefit of futures products. And so anyway, so you got the Nadex there, and then now, what are the differences? Well, I was doing some research. It was really interesting. I started hopping on some of these sites, and they have these bonuses, okay? And these, alternate, offshore binary companies. And, they may have an office here somewhere, but most of them don't have any offices in the U.S. But anyway, so they have these bonuses where they're like, hey, if you put in 10 grand, we'll match your bonus. We'll give you 10 grand. And I'm like, well, that obviously sounds too good to be true. And they're like, no, really, we'll give you 10 grand. And I'm like, okay. And so I'm like, what if I lose 10 grand? Can I pull out 10 grand? And they're like, well, it all depends. And I'm like, all right, here we go. Depends on what? And, well, it depends on, they have a ratio that you have to trade. So whatever your bonus amount is they gave you, okay, whatever amount you put in, you have to trade 45 times that amount in volume. So if you put in $10,000, you have to have, $450,000 in transactions for them to allow you to keep the 10 grand. So, which means you'd have to basically make and lose, either make 450 grand or any combination thereof, like make and lose, $250,000, make $250,000, lose $250,000 to beat your 10 grand and get the 10 grand bonus. And I'm like, well, that seems a little bit pointless. And they'll put it on your balance, but they'll subtract it if you ever want to go do a withdrawal. So it's not really a bonus. So just keep that in mind. Also, they, depending upon how regulated they are, they can change their settlement strikes. Remember, Nadex is the one determining the settlement strike, and they're pulling that information directly from routers. And they have no interest in you winning or losing. They have an interest in ensuring that you have a good, safe place to place your trades. And, ensure you have a place where you can get your transactions filled. That's a point of an exchange. Well, these guys don't. So if they have, a whole lot of people that are on one side of the trade, and they're going to lose, and they can move it one or two ticks and make them, make it where the company wins and the traders lose, then, they obviously have a conflict of interest. And so that's obviously a big issue. And I've even seen reports of where people at the same company reported a win and a loss, because one guy had a huge position, he reported a loss, another guy had a win, and what they did is they just moved it on that one guy's statement. So there's some really interesting things out there, and you got to watch out for them. You want a safe place to trade. Another thing that they do, this is really interesting, is the binaries on Nadex are price ladders, okay? Which means you have all these different strikes you can choose from. Most of the binary companies out there, what they do is they have like these 10-minute to expiration binaries. And you have to be, basically you say, in 10 minutes, gold is going to be higher than it is right now. Or 10 minutes, gold is going to be lower than it is right now. Which, okay, that's sort of cool, quick, fast 10-minute trade. Here's the problem, is the most they're going to pay out, if you're right, is 80%. And though 80% sounds really good, that's the most they pay out. So if I win once and I lose once, and I put $100 up, I put $100 in and I lost, so I'm down 100. I put another 100 in and I win, and I'm up 80. I'm down $20. Okay, if I win, two times and I lose once, I'm up 200. I'm down 80. Basically, you have to win 2/3 of the time to be profitable on those. And so they're setting the odds in your favor. Whereas at Nadex, a 1-to-1 is sort of like your worst trade. I'm talking about like if you're doing the buy and sell. Now, if you're going for premium, it's a little bit different. Those other ones don't even have the option on the premium. But on Nadex, you can go in and I can choose $5 spreads or $5 binaries that have a $95 payout. I did some the other day on the Fed funds rate. Y'all were watching that trade. The Fed funds meeting minutes. They came out, put them in $5 on each side. They popped up, and a lot of them we actually closed at $80. And so $75 on $5, that's a huge return, and compared to an 80% return. And that's not even a 1-to-1 risk reward. So, if I went in and I made $75 on a $5 risk, that's like a 1,500% return on that trade, okay, versus an 80% return. And so you just, be very aware of the games that are out there, and that's one of the things I love about Nadex. They finally give you a good, solid place to trade. They give you a lot of different markets, good variety, and they also have just a lot of things that are in your favor. They're going to be able to help you out. And so anyway, sign up, check it out. And the binaries are interesting. You got to know how to trade them. It's definitely helpful to have those deviation levels. And we had the trades we were looking at this morning. It was real interesting. I mean, it was just play-by-play earlier in the morning. I wish I had a show sometimes, like first thing in the morning here, because, man, it was just going. And anyways, so if we look at this, I want to pull up and show you what the amounts looked like. You could have gone in here this morning, okay? And even if you weren't in the morning to begin with, okay, let's just say you woke up and you see, around 7:30 the market's up here. Well, our deviation level was right up at 1411, and the market spiked it, hit 1412, and then started moving back down. So a perfect reversal play, okay? Well, it became even more perfect when you come down here, and then what happens? The market opens. And when the market opens up, then you got the gap play, okay? One of my favorite plays is the gap play. And so we were able to actually go short on the gap play. So not only did you have this right here, you had a nice trade, perfect standard deviation for taking profit if you were in overnight, but you also had a great short play off the standard deviation, and then you had a perfect gap play, and then you had a perfect reversal to buy off the gap play, and then it went right back up to the standard deviation, so you had another perfect reversal where it's going back down. I mean, this is just textbook perfect days for trading, especially for Nadex. And it looks like we got a caller, Steven from Princeton, New Jersey. Got a question about Nadex. How you doing?
I have an account on Nadex, okay, and I got an email yesterday saying they were changing their execution fees.
They're lowering it. They're capping it.
Yeah, do you have an idea why they might be doing that?
Yeah, it's good for you. What they're doing is they're making it to where the maximum fee, like it's 90 cents a contract, like if you're doing it one, right?
Right.
So what they're doing is they're making it where if you do basically 10, it's $9, so, but now it's $9 maximum. So if you go in and you place an order for 50 contracts, okay, your total fee is going to be $9.
Right. No, I understand how it's in my interest.
Right.
How is it in their interest?
Because it promotes you to trade more without being a negative on the fees being so high.
Yeah. So they're having some, I guess, feedback about maybe that their execution fees are too much then.
Well, I mean, they have decent fees depending upon your volume anyway. But, one of the things like I've been big on pushing, like the hedge strategy where you're doing 5, 10, 20 contracts, things like that.
Sure.
And so people get in and they're sort of like, man, it's not that the fee is that big in comparison to how much money you're saving on the risk side. But, it's like this does add up really quick. And,
right.
If you're going in and you're doing like a silver contract, that's like 50 contracts on Nadex to equalize a contract, okay? Well, if I'm paying 50 contracts times 90 cents, now that's a big fee. That's like $45 or whatever. And so that's a big commission, I mean, it's not a commission, it's an exchange fee, but whatever, it's big. And so they basically said, okay, to make sure that, everything's in a good ballpark, they actually started off with that model.
Right.
Where they actually had a cap.
A year ago, right?
Yeah, but it was a little over a year ago. Yeah, they had the cap, and then they went in, they did a tiered level, and then they went back to the cap. And I'm glad they did because I think it's so much better for us as traders. And basically, it's more money. The more volume you trade, you're not paying the exchange more for that. So that's awesome.
Okay. All right. Very good.
Yeah, definitely. If you want to right there, I got some more info about it for you too. I can tell you.
Okay. Great. Thanks.
All right. Right back at the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here. We had a caller on the line there. Stephen, are you still there? And if Stephen was still there or not. All right, well, we'll do a wrap-up here on the fees. What they're doing is, it used to be like it was 90 cents per contract. And then it went down to like 60 cents when you bought 11 and 40 cents when you bought 21, and then down to 25 cents if you bought more than 51 contracts. Okay? Well, what they did is, instead of having this whole schedule, they basically made it really, really simple. It's 90 cents a contract, up to 10 contracts, and everything after that, there's no additional cost. So if I place an order for 20 contracts, it's only $9 for exchange fees. Okay? If I place an order for 50 contracts, it's only $9. If I place an order for 100 contracts, it's only $9. If I place an order for 1, it's only 90 cents. You know, if I place an order for 5, it's only 45 cents. So pretty simple. Now, if I place an order for 10, and then I place another order for 10, all right, then that would be two separate ones. So that could be $9 and $9. So now the question comes, what if I place an order for 20 and only half get filled and I need to amend my order? Well, as long as you amend the order, okay, an open order that's working, and let's say half of them get filled and the market moves, you don't get all of them filled, you have to amend the other half. As long as it's amending the same order, it still counts towards the $9. So it looks at the aggregate order. Now, what about on the way out? Okay. Well, let's say I did tier in 10 here, and then I got 10 later and 10 later. So I paid $27, like three sets of $9 on it. Okay. Well, when I get out, if I put my order in for all of them at the same price there to get out, then I'll actually be able to get out at $9. So $9 exchange fee. Even though I'm putting in 30 contracts on the way out because they're all one order. All right? Now, what about when they settle? Well, if they settle, then if they all settle at once, then that's $9. And then if they settle out of the money, of course, that's a flat amount. So you actually don't pay anything if they settle out of the money on the trades. So it's pretty cool that you can take advantage of that, and I think it's awesome that they brought that back. That's something they used to have, and I guess people asked for it, customers asked for it, I asked for it, and they brought it back. So definitely give some kudos to Nadex listening to their clients, and I think they've done a great job of that with all the things they've been adding to their platform, the updates they've done on their charts, bringing the fees down to where they're at now, and just trying to make it in every way just a better way to trade. And I definitely think that Nadex is, in my opinion, the best way to trade. So, and there's so many different ways to trade it, but it's just the number one thing is traders have to learn how to control their risk, and it helps you get control of that risk. And now you just have to get a little decent at picking the right strikes and putting all that together, so that way you're not making bad decisions on that. So. Now what I'm going to do is go ahead and let's do a little wrap on the day for where the market is at right now. And just for all you folks who are out there and listening in from the radio, want to know sort of just get yourself a market update. And so on the market summary, what we have right now is we have the S&P up 4.2. We got the for 2 points, not percent. And then we got the Russell is up 2 points. We got the Dow up 62. The NASDAQ is looking pretty, not doing much there. And then we got crude, which is looking over. Let's see what that. Oh, we got a caller. So let's go ahead now. Let's take that caller, and I'll come back. I'll update you on the rest here in a second. We got Ben from San Jose. How's it going, Ben?
Hey, man, good. How you doing?
I'm doing great. I'm loving this day, man. This is getting better when you get days like this. This is awesome.
Oh, yeah. Swings are just out of control.
Yeah. Awesome.
Yeah, the reason I like your show a lot is I know you use one of your tools is Thinkorswim.
Yeah.
I've been using it to trade futures for quite a while, and I can see the power with Nadex. Because I always put my stop in first, and then I go ahead and trade. But I can see that Nadex does that for me. So I'm going to be trying that out pretty soon. But I was wondering if today you could just look at the December wheat futures on Nadex. I'm curious as to what they're offering.
They don't have the wheat yet. Now, they are constantly adding in more products. They have corn and they have soybeans right now.
Yeah.
So that's the two ags that they have on there right now.
Oh, okay.
But I can take a look at December wheat if you have a question about it. So you just trying to you can play on it right now yourself, or you're just curious about how comparing it to Nadex, or?
I'm just curious. I was going to try and do a short on it before the. I think it's too late for today, but I'm sure everybody's going to be out of here in about an hour. So.
Yeah, I'll be closing out pretty soon. But they have the corn, they have the soybeans, and they're basically as those ag products pick up and they're getting more and more popular. They extended the hours. I know they're going to be adding some more contracts overnight, adding some more stuff on that, and then basically as each ag gets more popular, they'll add in more and more and more ags. They just got to make sure there's enough volume, because obviously people want a good, strong market whenever they're choosing their market that they want to trade on.
Yeah, the other thing I was going to ask you is when are we going to see your face on the mic?
My face?
Yeah.
I can show you my face. Let's see here. I got a picture on TFNN, I think.
No,
you mean how you seen like Steve and Tommy and all that?
Yeah.
Yeah, I don't know. Maybe we got to turn that around, turn the camera on or something like that. What do you think?
Yeah, you need to get the little green rim or something.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back to the show. And has Ben hanging in there, or are we ready to go? You there, Ben?
Hey, Darrell.
All right, you back? All right.
Yeah, I'm back. I actually don't have anything else to look at, but I just want to say, man, you're doing a great job on this show. It's very informative. It's wonderful. It's going to get me to try out Nadex here pretty soon.
Sweet. So I love it. It's very helpful, and you can even combine it with the other trades. So you don't have to do it even just by itself. Like I said, you can hedge with it too.
Yeah, that's kind of what I was thinking at, is using it as a hedge tool with my other platform. So.
Yeah, exactly. You go in and you hedge. I mean, obviously you got to have the money to have the hedge drawdown on the other platform, but you are net going to be the same amount of money. And
well, I could do a trade on my other account with real money and then use the funny money.
Yeah.
Try it out. I'm just kidding.
But if you can cash that in later, that'd be even better, right? So can I turn that fake trade into a real trade? Just this one, not these other ones here.
Don't worry.
Yeah, one of the tools we're gonna come out with that we'll be launching here. I'll show you a sneak peek of it. I think we're on track, hopefully, for doing it next week. And if we're able to get everything all up and running, but I think we are. And here it is. It's going to be the box spread scanner. And you'll be able to go in here and say, I want to trade the S&P 500. And
talking about that tool, yeah.
Yeah, so it'd be really nice. And you say, I want to buy, and I don't want to risk more than $100. And there's the spreads that qualify. And then you click a button, it'll actually open it in your Nadex account for you. It actually opens the ticket for you automatically. So it'll make it really, really easy to trade. And so that we got that. We're going to be adding on the implied deviation levels on here as well. And so just trying to give you everything we can to make it easy. I mean, Nadex is a better way to trade, and my goal is to help it make it easier to trade. So
you definitely proved that, yeah.
But yeah, this is very cool. It's live data feeds directly from the Nadex exchange. So we'll be releasing that out here in the next week. But thanks for listening, and if you have any questions, man, do not hesitate to give me a call, okay?
Oh, I won't. You have a wonderful weekend, okay?
All right, sounds good. You have a great weekend, too.
Take care.
All right, bye-bye.
Thanks.
All right, another call. Keith. Hey, Keith, how's it going, man?
Hey, I'm doing okay. I was wondering if you could go through exactly in kind of detail how you traded the market this morning. Did you watch the market before it opened? Did you place a trade before it opened? Or what did you do when the market opened at 9:30? I think the market was going up pre-market, right? And then at 9:30 it turned around. Did you catch the turnaround, or how did you position yourself, or what exactly did you do?
Yeah, basically the market I didn't catch the up overnight movement. I was sleeping.
Right.
Wish I would have put a straddle on last night. If I would have thought about it, I would have, just like a binary straddle or something, just with Bernanke talking today. But anyways, we'll be using that for definitely put one on for the 6th. That'll be a good day to do one. Anyway, so right here, the market went up, and I hopped up in the morning. I was checking things out. I saw that it spiked up and it fell off that tip right there. And as you know, the implied deviation level, it hit that implied deviation level there at 1411, 1412. And so at that point, I'm ready to go short. And I actually went ahead and I sold a binary, and I also went short on the spreads. It came down and basically had my target to take all my profit off right when it hit the gap fill, because we had the same thing going. As soon as the market opened up right here, I'm like, wow, we're going to have a gap fill play. So added some more on, and we hit the gap fill. I took all my profits off and bought a couple to go long, and we were back up here, and then we went short again. This morning at 9 o'clock, we were talking about that, like, hey, we were talking about how we think the market's going to go back down. I didn't wait till it to get up here. I wish I would have. I went short here, but now that all those trades that we put on in the 9 o'clock hour are all looking pretty positive at the moment, making some money. So, but it had a full deviation down and back up. There was two things in your favor. One, it hit the deviation level. Okay. The second is when the market opened, you had a gap fill. So basically, when you have more than like a $1 difference between the previous day's open or the previous day's close and today's open, that's a gap fill. And more often than not, and I want to say it's like 70 or 80% on the S&P. Okay, not on all the other markets, but on the S&P, more often than not, it goes back and it fills in that gap. And so, play that gap fill, especially when you got that kind of gap fill. That's a great gap fill play because you got 10 points of profitability built in. And basically just sold the spread all the way down. So had the 14, I want to see, I can pull up the spread, the record. I closed most of them out already. Let's see here. As far as Pacific spreads, let's see, we were up at about 14 at 10. Let's see, which one was I looking at? Okay, I had a 14, 20, 13, 90 on. So I actually put one that had a bit of a risk built into it, but I had another shorter term one that was closed out now that I had on for like hedging it out. So I was actually hedging my Nadex spread when it closed down there. And then there's also like a little ARB play I did earlier this morning too. That's looking pretty good. On this trader here, I'll show you this one. This one I played with in the demo. I just want to see how it would work out. And it didn't come over. And went in and basically was able to buy at $13.99 and sell at $14.01. So it ARB'd in. And right now it'll close out here in a couple hours. It's up like $80. That's sort of a cool, ARB. Whenever the market's moving that fast, you can sometimes take advantage of those differences. But the big thing is, implied deviation, gap fill, reversal on gap fill. I was going for like half a deviation back up, and got that. Went short again this morning, and me and Tommy and Steve were all looking at it like, yeah, let's go ahead and sell this thing. And it was right around 14.05, 14.06 when we sold, and it went up against us. But the nice thing is, we're not worried about it going against us because our risk is capped. It came back down. But the gap fill play is probably one of my favorite plays to do on a daily basis. Whenever I see that, I love to go after, especially when it's big. So it's a trading sort of count on. You just got to take your profit because it will hit that gap and flip back around. So does that help answer your question on some of the things this morning?
Yeah, thanks a lot. I appreciate it.
Yeah. And so were you able to play some trades this morning?
No, I didn't. I didn't really know how to. I'm just kind of learning this, so.
I know we've talked quite a bit, so yeah, put it together. Well,
so I'm still.
One of the easiest plays I can tell you is anytime you see yesterday's close and today's open being separate, okay, then that's a play where you can look for a low risk trade to go for the gap fill. And that's an easy one to hop in and start playing with every day. And it's either going to really fill the gap or it's going to go in the opposite direction. And let's see here, like right there, we got that. Like that one, that was a big gap fill day. That one didn't fill, but this one obviously filled huge. And you can just go back and you can also look at it. One of the easiest ways is you can pull up the SPX, and you can basically see these gaps. If you hop over to the daily bars, you zoom in there, you can see a lot of the stuff on here. So, but just make sure you're monitoring the close of yesterday to the open of today, and when you see that difference in price, that's when you know you're going for a gap fill play. And you want it to be, like I said, at least $1 or more. On the spiders, you want 10 cents or more. But if you're doing the futures, like the US 500 or the ES, then you want $1 or more minimum to do a gap fill play. And really, probably you want like $3 to $4. But this today is a $10 gap, which is, that's just like show me the money.
Okay, I see. Okay, great. Well, I'll look for that.
Yeah, and there's a lot of ways to play. And you could play like a binary that's way down there, okay, and then sell it when it gets to that point. So like at the money. So the gap fill will be at $13.97. So you go and you could sell the binary, like say for $15, $18, and buy it back for like let's see here. Actually, no, it'd be selling it for like $18, and then you could go and you could buy it back for like $35, $40, and you'd end up profiting on that trade. It's a little bit reversed to how the binaries work. The spreads, you could just go short the spread, and then let's see. The other way you could play the trade is you could actually just do an at the money binary, a 50-50 1-to-1 risk reward. Okay, and just wait for it, and because you're expecting it to go down. So, but it puts you at a 50-50 risk reward or a 1-to-1 risk reward. And so, since they win most of the time, then out of the probabilities in your favor, then you ought to be able to profit as each one goes out. But that's a really easy one is just right at the money and just sell it, or buy it. So that way, when it goes down to that point, then that way you can close it out as soon as the gap is filled. But great questions, and if you have them, keep calling in and. I'll keep helping you out.
Okay, thank you.
You bet. Thank you. All right, so let's wrap up. Thanks for everybody calling in today. It's awesome. So I love when y'all call in. Y'all got questions. Nadex it's fun, but it's also new and interesting. And so with new things, sometimes there's just some questions on just figuring it out. And that's one of the things I talked about last week was strategy, system, and style. And styles, reading the markets, and really it's the diagnostic part of trading. That's what style is all about. And system is, your rules for entry, exit, take profit, stop loss. And then when you look over at strategy, that's just the mechanics of a trade. And so you got to have your strategy down. You got to understand the more you get the mechanics of how something works, obviously the better you're going to be at using it as an instrument to ideally help you profit and make money in the markets. And so we got the markets moving, and we got the S&P sort of moving down, moving up, moving down. Let's go ahead and let's check out where it's at right now. Last time I checked it was around 1402. Okay, so I was pulling back up a little bit, but let's see here. And it's looking like it's, I don't know, man. It may want to be closing right around 1400. That's going to be a hard level. I mean, you can just see how it just really fought through that. Back up to the 1 minute bars on it and to sort of see what kind of battle that looked like at 1400. And that was basically one bar that went down, and then it basically had about 10 minutes where it was just working on it, and then finally it went back up. So that 1400 level is a big psychological level. And so it's going to take a little bit more probably to break that. I don't see that selling off today unless everybody just comes in and starts dumping because they're afraid of a 3-day weekend and who knows what's going to come out of Europe type thing. So, but yeah, I mean, looks at they might wipe out a good chunk of the gains, it looks like, before the day's over. Not really any big plays to play on at this moment at 1400 that I see setting up. So over here we got, let's see, we got oil is up $1.80. So it's been moving like crazy. And after that big drop it out, I mean, look at this thing just down, up. And I mean, it's, whew. So you want to be trading Nadex if you're trading oil. That's all I got to say. Like, look at that. I mean, you're talking that's a huge move down, huge move back up. And no better way to trade this than with Nadex. So because you're not worried about this volatility. The volatility becomes a good thing for you. You're not afraid of it because it won't spike you out. And I mean, what if you went right here and you bought and this thing's, and you're like, oh man, I'm making a lot of money, and then you back off and you're like, you hesitate for a second, and the thing just falls down, and you get stopped out. Well, with Nadex, you're not stopped out. It pulls back up, and by the end of the day, you know what? Hey, you're still profitable. So it really, really does work in your favor. Looking over here at silver, up $1.04. We got gold, which is a pretty big move over on silver. It's just been taking off. And check this out. I mean, just flying up and back out to 5 minutes. You can really see that move. I mean, look at that thing. Just, you can trade silver over on Nadex also. And we got copper. It's up. It's barely moved. It's 0.2% move right there. We got pound dollar up 80 pips. We got euro. The currencies have been just insane. Check this out. I mean, these currencies have been flying all over the place. Look at this. I mean, it's just up, down, all around. And a euro dollar, I mean, that thing just like went. I mean, it was like, what is going on? Things flies all the way up to 2,600 from 2,500, making 130, 140 pips in a day. And backs off, but does about a 50% retracement, just chills out. And, just all these announcements coming out. And basically that was like a weaker dollar, and then the dollar started getting its strength back. And when they're like, maybe there won't be a QE, or maybe there will be a QE. And, that game's going to be going on for the next 2 weeks until September 13th. And then it'll go on for the next 8 weeks after that. So, but September 12th being the big day. So just be watching out for September 12th, September 13th, and next week, September 6th. So, wrapping up so last time we got here, we got corn and we got soybeans. And we got soybeans, looks like right now they're up just, 0.19, not just a massive move on the day, but still a move nevertheless. We got corn down about 7 points. So that's a pretty good move on corn. Not big compared to recently, but if I just pull it up and show it to you here. So, I mean, it had a nice move. So, it's had some insane moves lately, but that's a pretty solid move, and it was during trading hours, so you could have really taken advantage of that one too. And then looking over at the fundamentals of the day. So, obviously, there was one big fundamental of the day, and that was just Bernanke and, his little speech. But beyond that, without going into that and just breaking down every single little word that he said, we can check out a couple other things. Canada had its GDP, came in a little bit better than expected. So, that was actually a good thing to happen this morning. And the market was rising, of course, this morning overnight as things were coming out. Show you that right there. If we look to that point, everything was looking nice and chipper. And German retail sales were looking bad. And then the nationwide HPI over in Britain, that came in a little better than expected. It's basically one of their early reporting on housing inflation, meaning housing is starting to get more expensive. So that's a good sign for them. Italian, their unemployment rate was a little better than expected, but still at 10.7%. So for the month, and 10.6 for the quarter. So they obviously pretty rough over there. And we had the Euro CPI came in a little better. Had the unemployment rate in Euro stayed steady at a steady 11.3%. So they expected 11.3. It came in at 11.3. It's trickling higher and higher and higher. And that was 11.2 last month. It was 11.1 the month before that. It was 11.0. And if we just keep going back, then it was 10.9. I mean, it's literally ticked up 0.1 like every single month. So it's just getting worse and worse and worse over there. So hold on right there, folks, and we'll wrap up with the fundamentals.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome on back to the Diagnostic Trading Hour. And we're doing a quick wrap up on the fundamentals here. Looking at the fundamentals, we had, obviously, the Bernanke was that big speech that came out. And he basically just said, it could be warranted that some more things happen, but he didn't want to box the Fed into having to do something. And so he didn't rule it out, but he didn't rule it in. Nothing really new there. And that's sort of where a lot of people were disappointed is he's like, as of right now, we're not looking at this, but, we're ready to act if we need to. So basically this is a little bit more, he almost seemed a little bit more leaning towards it, but at the same time, not just laying it out there now. Understand in 2010, he actually used this to set people up for the QE2. But that was definitely a different scenario than we have right now. And I think Europe has just escalated to a whole different level. So we're going to see how this happens. Really, I don't think we're going to see much until we see everything come out. Not only September 6th is going to be an insanely heavy news day for any kind of QE question. And the next question to ask is what's going to happen on September 12th when the European Central Bank, or not the European, but when the German Constitutional Court decides whether or not it's constitutional to let the European Stability Mechanism go forward. Because there's a lot of issues with that and the sovereignty issues that go with that and the ability to basically hand over sovereignty to the ESM on budgets and how things are done. Basically, it's Germany trying, are they going to say is it legal and is it constitutional? And all the other countries have to agree in their constitution ratifications. The goal is to have that up and running by January 2013. So whether or not they have that goal, we'll see. But that court decision is going to have a big impact. So, everybody's going to go through and they're just parsing. Some of the stuff was good, some of the stuff was bad, some of the stuff was not so good. And that's why you're just seeing these wild swings in the market. And at the end of the day, they really don't know what to do. So, and he's in a tough spot, obviously. But he's trying to just, again, make sure he's not boxed in, as Reuters put it. And then you go over and you check out you can actually watch his thing over in the Tigers Den. I posted the stuff up there for where you can look at the you can go to the Fed's website and you go to federalreserve.gov and you can actually find the latest news release. So you can actually read and see what he said and all that. But the speculation doesn't really matter. At the bottom line, you need to trade the charts, trade what you see, and limit your risk, maximize your reward. Okay? So you want to be a step ahead of the markets. And the best way you can do that is to basically have plans in place that goes, hey, where are people going to place their orders? And that's part of that implied deviation thing, okay, is where are the orders going to run out? All right, so where the short's going to come in or where the long's going to come in. And that's the whole point on the implied deviation. Today we had that right up at 1411. It went up, orders ran out, when it fell down one exact deviation, went back up one exact deviation. Came back down. I didn't expect a full deviation back down. I didn't expect it to move this fast, but it moved pretty far back down and it's back up a little bit. But, I mean, you really got 1, 2, 3, 4 plays right there that you could have taken advantage of in just one day. And all on deviations. Where are the orders going to run out? And so it's all about the orders. That's the name of the game in the markets. Orders have to be filled for an exchange to exist. And so where are the orders? The market's going to go where the orders are. That's why it exists. You can go there to find a place to get your order filled. And that's why we look at statistics like deviations. That's why we look at fundamentals like what things are going to drive orders. Okay, so we know when orders are going to start being placed at a very heavy level. And then what direction should they be placed? If it's a positive or negative news, right? And then you go in and you look over at the seasonal cycles. And one of the things that was happening today, okay, that people forget about, we had payroll cycle. Last day of the month, Friday. All right, so what is payroll cycle? Payroll cycle, people get paid, money goes into 401k, money goes into mutual funds, money goes into stocks. And so that ought to get a little bump today, and it also will roll over. We ought to see a little bit of that probably on Tuesday, regarding any possible bad news. But it would have been worse if we didn't have the payroll cycle. We would have saw this thing go down a lot more than it did. Anyways, y'all have a great day and have an awesome Labor Day weekend, and I will see you ready and cooking when all the traders are coming back from their summer break on Tuesday. Y'all have a great day.